goodness gracious. My bad. I forgot to hit the go live button. Ah, man. Duh. You could tell I've been not getting a lot of sleep. I forgot to hit the go live button. I'm up here talking all markets and the whole 9 yards, Brother Will, and I totally forgot to hit the go live button. God dog it. Man, do I feel stupid. I'm sitting here going, why can't he hear me? You should be able to hear it. And now I know why. Anyways, I'm looking at trying to buy I'm buying man, you missed everything. I was talking for like the last half hour, and I'm talking to myself for the last half hour. Man, talking about looking at markets, talking about what may go on election, the whole 9 yards, and I don't even think you got any of that. I was talking to myself for the last half hour on which trades that I'm looking at putting on, and I forgot to hit the goddamn go live. But that's good because what I was looking at, this is something I'm looking at right there, which is a double diagonal on SPY. I was going to try to do it, but the XSP has no volume because I really wanted to do the same trade over there, the 566, 580. And that's what I was putting together, was a buying volatility trade. And that's what I was looking at. Man, I feel stupid there, Brother Will. I was talking to myself, thinking that you were on the live stream, and where it says go live, I'm damn, a whole half hour of just talking to myself. I love that. But we had already checked, I went through and I checked. I said, okay, where are bonds? Bonds, pretty much, the down less than a quarter of a percent, basically a quarter of a percent. Where's VIX? VIX is down a little bit. It's about 4%. So it's VIX, VIX is down. If we go to the cash VIX, we're down 5%. So yeah, VIX is VIX is definitely getting ready for Donald. So VIX is down. E-mini ES, and they're up 44 points. Spiders or the SPX about 45 points. So I mean, it's definitely setting itself up for a possible down move in the next few days. And my reasoning is I've been saying, and that was the thing I was telling you in KW, is if volatility is being held, they're holding on to volatility. Let's check it out. If they're holding on to volatility, oops. Going into, let me go to the VIX. That's the one I want to see. Cash. If they're holding on to volatility, going into into December, volatility doesn't kick out till January, and it starts to come down. You're talking about a massive explosion. No, actually, not really, not bad. This might be pointing to Kamala. We'll see. No, to Trump. Excuse me. And the reason I say that is tomorrow volatility spikes, then it starts petering out, and then it drops out. It wasn't like this before, because remember, it was holding on to that volatility. So this might mean that Trump's going to win because they're not looking at a contentious election. Is the next few weeks being hanging chads and and court cases, and that's what I think that they're setting up for. Let's look at E-minis, and I don't have the skew up there. I really dig a lot of the Theo trade. Hey, Duck, always good to see you, Duck. Always good to see you. Yeah, Brother Will, I can't believe that I had this for the longest time. I had I was just talking to myself with this, and I didn't hit the go live for a half hour. But we went through markets in terms of the very first thing. Again, all I care about is volume. I have to see liquidity. If liquidity is not there, then it's not going to work. It's I'm going to have problems. So, but I'm looking at this, the E-mini ES. Let's look at the volatility on that. Look at that. Volatility is going down. It wasn't like this before. So this is pointing to more than likely a Trump victory. Look at that. Volatility is getting sucked out. And I would expect that because of an election, because all the brouhaha about an election and everybody says, okay, we've done this, it's over with, and everybody stopped crying about it. And then all of a sudden, markets normalize. So this up move may point to a continuation of up moves because of the fact that the volatility, I'm not seeing volatility go buck wild like it was the other day. So maybe Donald Trump set the stage of possible court cases and everybody's freaked out, because they're already talking about election fraud and nobody, only 80 million votes so far. So I mean, it's still like, oh my God, like I said, I got to hand it to him. I got to hand it to Trump. He definitely knows how to, it's like working the orchestra, or as they say in the movie Wall Street, like Gordon Gekko the Great. Always good to see you, Duck. Yeah, it's a death to Ukraine. Oh, they're getting it. They're getting their hat handed to them. So I'm looking at this, going, wow. Here you got E-mini S&Ps up. It was getting up like the 40. Now, if this thing pulls down and crashes, then if you see the volatility in this thing crash today, before their elections, then chances are it may point to a Kamala Harris, because they will set the volatility out just because it's post-election. But I'm just kind of looking at this going, hey, what if? I didn't see this the other day where, they were holding on to that volatility into January, which meant that more than likely it's going to be contested election, hanging chads, the whole 9 yards, court cases, insurrections, civil war, people shooting at everything, bombs exploding in the Federal Reserve, and then, hijackings happening of Proud Boys and Boogaloo Boys hijacking, Federal Express. I thought that this was going to happen because volatility was holding on to itself. But I'm not seeing that. And I have to hand it to Homeboy, who was talking about the skew index. And, I would go through that, but there's no need to. That's on Thinkorswim if you want to look at the skew, because I don't think we could see it here unless we go. But, I'm just looking at this. What I was looking at was a spider trade, the SPY. And I was looking at this double diagonal because I'm looking at an increase in volatility. You get paid $17 a day to hold this. It'll cost you $92 or 92 cents. 92 cents is your buying power. And, it's not bad to pay 92 cents when you're getting, at least on the first day, you're going to get $17 of it back, in terms of, but the thing is, I don't like trading calendarized stuff a lot on things that could be assigned. And that's what I was looking at. The SPX is just too expensive. You got to take that and, multiply it by 10. And I don't want to take that kind of risk on a quote unquote election. But, I was looking at that, and then I was looking at the XSP doing the same thing of a 566, 580 spread, double diagonal. And like I said, I'm not going to stay in this trade very long. Okay, a 1014. But see, the thing is, with the 1014, in terms of your spread, there's no volume. 566 has nothing. There's nothing there. So, so it would be like a waste of money. I mean, you could go 565, but still yet there's nothing there. So 565 on the 10, 580, and sell those. There's nothing there. So it would have to be the spiders, the SPY, which, like I said, I don't like doing too much there because, I've been assigned before, so it's not like the end of the world. I'm glad I read your telegram, Brother Will, because I would never have known that I was just talking to myself for a half hour had I not read your telegram. It just popped up, and I was like, oh yeah. So it would have never done that. So, but I want to buy volatility. Now I could do an at the money calendar, but this thing's going to move, and doing it at the money calendar, it's going to go against you. So if I did this out of the money, it's a speculative bet either way. My thing is doing it this close. Like if I did an at the money spider, so I got the 10-14 spread. I'm gonna remember this because I can't save this trade. That's the thing about this. You can't really save trades in this. So if I did a 10-14, 10 days out, 10 days sell, 14 days buy, just because remember I showed you the volatility. So I do it in puts. So sell the 15th and buy the 19th. Okay, and buy the 19th. Okay. That would let's see the 19th. That would cost you about 39 cents. You get paid again $9 a day in theta. I mean, but this thing's going to go against you. Okay, just know that. That's just the nature of this particular trade is that it will definitely go against you for the simple fact that the thing about it is you've got the expected move of this thing is just ridiculous in terms of they expect this thing to move and your deltas are pretty much it's a 50-50. The expected move in this thing is going out. It's what, like $16 expected move. So that's why I went half the distance on the expected moves of this. I went half the distance, and that's what I did because I went down to, like, instead of going down, like I said, these deltas are at, say, this delta would be the 26 delta. So the 26 to the 46. So I said if I brought these down to around 37 or 30, we'll go down to the 35 delta. That would be okay. There's the 566. So if we brought these down to the 566, it would cost us a little bit more because of the skew, but we'd still be getting paid the $9 a day. But we have room for this thing to, we definitely have room for this to be, to be in our favor. If I'm going to do this, I'd be speculative and think that this market's going to go down. So therefore, we got room. So this is what I'm looking at for the end of the day. I'm gonna wait, until end of the day when volatility starts to creep up a little bit because of an election. Then I could put this trade on, because that's what I anticipate. I anticipate, even though markets are bullish, if markets are bullish going into the close, I would anticipate them actually getting bearish tomorrow because of the uncertainty, after election. And then if Donald Trump wins Thursday, Friday, it gets back to being bullish, or at least ranging, and not, because volatility will be sucked out by that time because nobody will be thinking about court cases. But if Donald Trump loses, then not until next week. I don't think volatility will be sucked out of this market until next week, if that. Might even take 2 weeks, which means you'll be able to start selling see, if I buy volatility now and then I get out, remember, I don't want to stay in this trade more, because I got, this thing is what, the 10th? I know the 14th. I want to be out of this trade Monday at the latest. I want to get out. I mean, if volatility, if markets get crazy tomorrow, I'll get out tomorrow, because then I'll make whatever profits that I can. Like last time, I made 35% over the weekend doing that. So I would do the same thing here, trying to get like 35%, over the weekend, that kind of thing, and get out. So, but if I could get that tomorrow with a volatility increase, if it does increase, because it may not, once you get this election result, volatility might get, all these option traders are saying it'll get sucked out tomorrow. And I showed you the VIX. The VIX is steadily going down. So it looks like VIX is pricing in tomorrow's after, like, tomorrow, maybe at the earliest to Friday at the latest, the volatility will be sucked out of this market. But my thing is, what if Donald Trump loses? Then everybody's more than likely going to be they're going to have to readjust. And that's why I'm holding on to this trade till the end of the day. I'm not into selling any volatility right now, because this thing could get more volatile as the day goes. As the day ends, it could get more and more volatile because of the fact that you're in an election. I always like to take in consideration. But if I'm buying volatility, what we do is we go with the IV rank. You go with the low IV rank, start looking for stuff that's low IV. I'll do it with a shorter because I don't like to do too many stocks on a binary event like this. So we'll go with ETS. What is the lower IV ranks of ETS? Remember when we're selling volatility, we go with the higher IV ranks, and then we're looking for stuff to sell that's highly liquid. Lower volatility, we're going to see what we can buy, and lower IV ranks. Look, that EEM trade, I'm still in that. That's when it's emerging markets, and if Trump wins, I'm thinking that that'll get more volatile. The traders will be thinking, oh, there's something with China. China's in the crosshairs, so therefore that volatility might increase on me a little bit. I mean, it's been going down, so I've been kind of ranging a little bit. I think I'm up, I think I'm flat deltas on this. We'll see. I think it may be flat deltas. EEM is 1%. Maybe my deltas are a little skewed. We'll take a look. So, anyways, all this lower volatility stuff. There's not really a lot of it. You got the DIA, you got EEM, and that's about it on lower volatility. Everything else is over 30. So is it over 30? No, let's do that again. I'm looking at it wrong. IV rank. There we go. IV rank. I had the IV index. My bad. So but everything is still over 30 IV rank. So it's not giving me a lot of opportunities. I like IV ranks in the teams when I'm doing, remember, king is volume. It's got to have, look at these millions of contracts. I like to see a lot of contracts. King is volume, queen is volatility. And the queen has the volatility is IV rank, IV index, IV5, implied IV index 5-day change, and the individual expirations of volatility once you settle on something to make a trade. And those are your 5 things that you look for. If you're doing buying volatility, you want to see red in the 5-day change. If you're selling volatility, you want to see green in the 5-day change because you're selling something that's getting more expensive. It's going up in price. If you're buying volatility, you want to buy when something's going down on the IV5 index because you want to buy something cheap. If you're doing IV index, the only thing that I see that's close that I could actually do a trade on is the Qs and the DIA. Because the Qs mainly. DIA is a little bit out there, up there. It's in the 46% IV rank. Anything over 30-ish, 33, 34, I want to sell. I don't want to buy. This is very close. The Qs are the only thing that I would possibly do a trade on that might pay. Now, the spiders, the SPY, that was definitely close. I mean, it's 31. That's the one that I was telling you about earlier. It's 21. My eyes are shot. No, it's IV rank. No, it's 36. So 32, 36 is not the greatest, but these do have room to run to the upside in terms of implied volatility, especially now that you got markets going up and volatility going down on the Qs. It's not going down on the SPX. I would like to see this turn red, which means you're going to get a cheaper price to buy the volatility. Qs are giving you kind of the NASDAQ's giving you kind of a cheap price. But the thing is I don't like calendarizing a lot of these ETFs because of assignment, especially in a binary event. Not to say that'll happen, but if I did the same thing on a 10-day, 10, 14-day, going out, the probability of touch, let's see, so we're out from the 491 strike, 474, that would be around like the 4, let's see, 10, let's see, that's 4, what is that, 4, what was that strike, the 491, 470, 471, no, 474, so what would that be, 10, 10, see, 10, 10, 11, 12, 13, 14, 15, 16, 17, so I'd be 8 strikes down, 3, 4, 5, 6, 7, 8. So like the 484, about 35, we'll go to the 483. There's only a few contracts out there, but if we sold this one, and then we bought the 19 on the 483, we buy the 19, 483. Again, this is just speculative. We'd be getting paid $9.44 per day. It costs us 49 cents to do it per contract. And, we are long deltas. We are definitely long deltas, but we have like a 68% chance that market will touch if it wants to go down. That's how, I mean, we do have a 68% chance that it'll hit our wheelhouse on the Qs. Now, if I did this, I'd do it on the Qs because of the fact that you had volatility actually, you got volatility actually, let me get rid of the zones here. Where's the zones? Get rid of the theoretical zone. Volatility is going down. P&L expectation, P&L Theo. It's interesting. I'm looking at that. The P&L Theo. You know, just saying, nope. Yeah, I mean, look at that. That's kind of interesting. Let me see if I use per contract IVs. There we go. Using per contract implied volatilities. There we go. Remember, I always like to look at that mountain, and I couldn't see the mountain. Okay, that's expectation. That's, again, this is theoretical. Deltas, I don't care about deltas on this because we already know we're short deltas. Very few. I mean, basically delta neutral. And I don't mind that. You know, I mean, it's basically a delta neutral trade because of the volatility that I'm trying to buy. I mean, it's dealt was what 0.06 point less than 1 delta. So I don't mind that. I don't mind that at all. Theoretical. Okay, that's our theoretical. Okay. So anyways, I'm just looking to see if I could pick up some theta. If I could pick up some theta on this, that would be an interesting trade. If I could get a little bit on this. That's, you know, I'm still trying to decipher a lot of the you know, the Tasty analytics for Tasty's analytics in terms of analyzing trades. I could do this on Thinkorswim, and it, you know, is pretty cut and dry. I've used it for years, but I'm just kind of looking at this, going, okay, if this pays me that per day, I'm basically delta neutral, gamma neutral, which I don't mind that, even though I'm underneath the market. I'm underneath the market half the distance of the expected move, picking up a 68% chance that this thing can touch me. The moment that this moves down, volatility kicks up, and I get more theta, because that's just normally what happens when markets fall. You get more volatile. Therefore, it'll give me more theta, more vega. And what's my vega on this? That's probably why I'm. Let me see what my vega is. Because that's probably what I'm. The ultimate. Let's see. Let's put vega up. I don't care about pop on this particular type of trade. I just want to see what my vegas are. So, okay, so volatility goes by each point. If volatility, each dollar that this thing moves, I lose $5 in vega, $5 in volatility. So I can understand why this now. You know, I can see why it is. If I get more vega, each point that this moves, I get $5 that this thing will actually give you in vega. The thing is that I like about it is the expected move again. Let's go to a chart. Well, we're already looking at this. Okay, this thing has already moved $4. So if we go to a chart, and you know how I showed you how to look at this, ATR is showing, and I always double the ATR, and especially because of an election, this thing can move easily $12, $13. Not saying the Qs will, but this thing could easily move $13 in the next couple of days. Because I always like to double the ATR, you know, the 9 and the 21-day ATR. And I say that if that can move there, then that tells me what the probabilities of you either making or losing money. I normally use that for selling volatility, but buying volatility, I want to use that. I do want to see that. KW, good to see you. Duck says Richard Spencer gave his full-fledged endorsement of Kamala Harris. You got to be kidding me. Full-fledged endorsement of Kamala from Richard Spencer? You said you just voted for crotch grab. Yeah, I'm fixing to go out and vote here shortly. You know, I'm fixing to go out and do it here. I just wanted to set up my early morning market because I'm gonna do my voting. Man, Duck, I was going through all these ballot measures. They've got so many different measures on this one. I mean, it is just ridiculous how many measures they got. And I'm going through each one. And I'm going through. I've done this before, and I want to see if there's any new messages on some of these social media sites. Some candidates don't have a social media, or at least they're hiding their social media presence. So I have to hide that because I want to know what somebody's saying on Twitter. If I'm going to vote, I want to know what that candidate is going to say on Twitter. I don't want to just vote and then all of a sudden, 2 weeks later, I find out, oh yeah, he said that, that men should become women overnight. I'm like, nah. I want to know what kind of. So I'm looking through their social media presence on whatever candidate that is trying to run for like Senate, House of Representatives, sheriffs, prosecutors, judges. I want to see what do they do when they're not running for Congress or running for office. I want to see, if I see some, like they have a dog and a cat, and that photo was just put up, like a post that was put up like 3 weeks ago, and you see like a family of four, Dick and Jane Spot, and Sally, and Dick Jr. and Picket Fence. But then I go back like a year, or even back to 2017, and I see something that says, yeah, we think Haitians eat cats and dogs. That's a prosecutor I don't think I'm gonna vote for. I want to go through their social media post of like 2017 and just see if there's something that I see that there's something wrong, then I'm, or something that might impact us. Then I'm gonna be like, I don't know about this candidate. So that's what I've been doing. It's just analyzing, I've already gone through the Senate and the House of Representatives. I'm up there now. And then I've got a bunch of judges that I want to go through their social media posts. It's mostly judges, not as much as prosecutors, because prosecutors and a certain, like state's attorneys and stuff like that, I expect their stuff to be what they are. But as judges, I have to go through these judges' social media posts and see if I see their presence on either X or their presence on Facebook, because that's where you're going to most likely see their post. And so that way, then I'll know, Duck, okay, this is this guy or this female. I'm gonna be like, I know what you're all about. If there's something I can use, I could use it. But if it's something that's going to be detrimental, I'm not. And that's what I tell folks. It's not just about voting for certain measures that a person says, oh yeah, we believe in that, and we're going to do that. No, I want to see what they think, or who they are, is what I should say. And the only way you're going to see who they are is you go through their posts on social media, if they have a social media presence. Some of them don't, but you go back to like the last, not this president, the one that was before, because the one that was before is the one that wants to be now. And I want to see what their thoughts are, especially federal judges, or state judges. Oh my gosh, I want to see what their posts are. So I want to see, Trayvon Martin, he got what he deserved. Okay, I know what I'm dealing with. And he wants to be circuit court judge of what? Okay, I know what I know who. I got it on Facebook. I know who you're all about. Dang it. Be like, I know what you're all about. God dang it. But yeah, you said Richard Spencer, full-fledged vote for Kamala Harris, and now the world's gonna end. Seeing something like that would make my skin crawl. I'd get scared. But yeah, because like I say, voting is a tool, especially when it comes to judges, because your judges are your courts. And I keep telling folks, judges are your courtrooms. And so if you know that, your judges are your government, excuse me. Not, they are your courts, but your judges are your government, because courtrooms actually determine what's going to happen in government, because everything goes to their courts. Every decision goes through their courts. And then once somebody signs off on that decision, then you know that it's going to be there for you, against you. So if you've got certain judiciaries that have been posting certain things on Facebook or X that don't really coincide with your political leanings, then chances are, you're going to know that and what not to vote for, especially when it comes to judges. I mean, I always tell folks, when you're voting for judges, whether it's on the midterms or whatever, always look at social media posts. Always look at that. Look for them. Find them. Or folks that posted on, even if they don't post, look at the folks that comment on posts that they have made. And then therefore you'll see what their leanings are. If they're leaning in your, if they're in your interest or not. If they're in your interest, hey, deal with it. If they're not, then okay, this guy ain't getting in. So it looks like to let you know, Brother Will, I'm looking at the cues more than I'm looking at the spiders on buying volatility. And if I do it, it's at the end of the day. Because we're looking at a situation where volatility is getting sucked out of these markets. Yeah. It is getting sucked out. It's down 6.82%. The volatility is down. I love this, because that means that I'll be able to make more should tomorrow be, extremely volatile. That's what I'm looking for is volatility to increase. And if it gets sucked out tomorrow, that's more than likely telling you that a Kamala Harris is definitely winning. I mean, if you see that volatility during this election is going down, chances are it's telling you that Kamala Harris is going to win. If you see, look at the VIX futures on this election. I'm not telling you it's a guarantee. Just look at the VX, the VIX futures, or the cost of fear. Look at the cost of fear, and then also look at the cost of bonds. If you see the cost of bonds going up, but the cost of fear going down, that's kind of like it's like a no-brainer. You got to kind of juggle. But if you see the bonds going down, i.e., interest rates going up and the cost of fear going down, then chances are that it's going to be a status quo because you're still having problems with inflation. Keep in mind, the Fed's coming out their Fed is coming out 2 days later to give that quarter point interest rate, which is very apropos. 2 days after an election, they come in with a quarter point, interest rate, devaluing, cutting interest rates by a quarter of a point. Here's the kicker: the first one that they did, that basis, what was it, 50 basis point that they cut, and inflation still was not tamed going into a so-called election. Now, if VIX goes up during this so-called election and bonds go up, then chances are you're looking definitely at a Trump win because of the uncertainty and the folks running to safety because they're thinking it's going to be a down winter into the so-called winter shopping season. Black Friday will definitely be Black Friday for a lot of Kamala Harris voters. And I'm not talking and I'm talking a gloom Friday for a lot of them because of the fact that you're going to have, that's if Donald Trump loses. If Donald Trump loses, then, if Donald Trump loses, then they're looking at a Black Friday because of the fact that you're looking at uncertainty going into the end of the year. But if Kamala Harris loses, then you'll more than likely see, you'll more than likely see the volatility get sucked out. But watch it during the election because I'm confusing myself. Watch it during the election. So if volatility increases during this quote unquote election and it remains higher, chances are it's pointing to Donald Trump winning because of the volatility getting sucked out because of the fact that, just to make sure I got that right. Yeah. Volatility increasing. Because it's pointing to a Kamala Harris winning because of the fact that you might have the uncertainty afterward. Volatility decreasing might be because they're thinking that Donald Trump won't sue because he's going to win, and volatility would more than likely decrease. Because you saw the chart, the one I was talking to myself for a half hour, and I was showing you that. Okay, those are some positions. Where are we at now? Okay, we're not really doing anything on our positions. I mean, they're basically all neutral. I mean, they're all positions. My VIX came off a little bit. No, I'm not. Remember, this is a trade that I'm holding on to. It's a speculative trade. So let's go to volatility. Look at this. Volatility is getting wiped out into it changed from when I first talked to you. Remember, look at this. It's high volatility, but actually, no, it's getting sucked out a little bit, but it's not as sucked out as it was when we first started talking. It's definitely come down quite a bit. So they're sucking volatility out into the future months, which is kind of telling you chances are they're looking at Donald Trump winning. So if you see volatility during that election being sucked out, they're probably thinking, hey, he's not going to sue because he's got his way like a spoiled little brat. That's all he is. We know that. And that's why I'm a vote Trump 10 times. I'm going with like 18 different disguises. One of my disguises I'm going in as Kamala Harris. They're saying, who is this Negro with a mustache and beard looking like Kamala Harris? No, I'm not. My name is Kamala. Kamala Harris. I'm voting for Trump. I'm going to have 18 different. I'm going to go in as Ted Cruz. You'll say, man, Ted Cruz is not black. You cannot be Ted Cruz. I'll be, yes, I am. I just got a suntan. I came back from Mexico. Like when Texas was going through that snowstorm and the frost, and it was an Armageddon winter. Ted Cruz is down there in Mexico sunning himself, saying, y'all, you guys can deal with it, but I'm not. He's like, yeah, I'm your senator, but hey, that's as far as it goes. Me helping you guys out in a snowstorm? Hell no. I'm in Mexico. And he went and vacationed in Mexico and came back with a tan. Well, they're going to see me at that voting booth, and they're going to say, isn't Ted Cruz a Texas senator? I'll be, no, I'm him. Why are you voting I'm voting for Trump. You know, why? Not because I want markets to go up. It's just I love the uncertainty. I love the contention, and I love the fact that he almost destroyed the United States the first time, and I'm trying to get him to complete the job. But anyways, going into VIX, brother Will, it wasn't like last week when I think I did that other live stream when VIX was going, volatility was going up. Look at that; it's getting sucked out of this market. Volatility is going down. I'm just like, man, I dig that. I dig it. I dig it. Just because it's pointing to a possible Trump. I don't think we're going to get the VVIX in this. I think you have to go to Thinkorswim. The VIVIX. Yeah, see VIVIX, unless I go dollar sign. Let's see if it's dollar sign VIVIX. Nope. And let's see if we get the skew. No skew. No. So I have to go to Thinkorswim to get that because I want to see the volatility skews, you know, and I'll do that probably later just to see where volatility is at. But in terms of, you know, we went through our markets, we went through we went through the inventory, and we go through because our inventory, you know, markets are basically were, you know, basically flat on our deltas. Let's see, just double check. With the exception of VIX, everything else is pretty much delta neutral. So, you know, so we're delta neutral on these trades. So anyways, so later on today, after I get back from voting, which I'm fixing to do here in a minute, we're looking at either I won't do the SPX, it's too expensive. That calendar. I mean, you know, because it's just way, way too expensive. I would do the Qs, you know, the Qs calendar if I did that. And what was the Qs that I had that at? Let's see if we could do the NDX. QQQ. The Qs, I did the 483. So if I went to NDX, let's see what we're like with the 10. So we would have to go out. Okay, so we would be going out instead of 1014, we'll go 914. So we went out 9 days. We'd go out to November 14th. And see, look, yeah, there's no, remember, King is yeah, I couldn't do this on NDX. I never trade NDX. Never. You know, it's always SPX for calendarized stuff. We went out 9 days. Yeah, see, 9 days. If I did go out, see, now you're getting, look at that, how many thousands of contracts. So if I went, they expect this thing to move 151, so 75 bucks is where I would place this. Again, I'm looking at around the 35-ish deltas, 265. So it'd be 5705. So this 5765, 5705. I would sell the I'd sell that. What is that? Around the 37 delta, 5705, and I would buy 4 days later the 5705. That's the AM contract. Ooh, and I'd buy the 5705 4 days later. 5705. There's not really a lot of contracts on that. That's $1.35 that I'd be spending on this. You'd be getting paid $3 a day on Theta. You know, $3 a day. You still got the Vega risk that you would have. I'm looking at the spread between the 135 and $2. You know, the $2 natural. You know, that's just ridiculous. If I did it like I did on the spiders, you got a 47 on the mid to, or 41.47 on the natural. You know, so it's like 37.45. Let's say 37.47 natural, and it's, you know, it's a lot more. You know, and the Theta, you're still getting some Theta. You know, and that's all I care about. This is a pure Theta play, pure Vega Theta. You know, but volatility is getting sucked out of this thing. It should be getting sucked out of this. Let's see. Yeah, look at that. 50 points. SPX is up 50 points. Hey, we'll see what happens in this election. You know, ooh, wow. What's this? Okay, this is something else. I thought it was a Amber Alert saying evacuate. I was like, what the hell? So anyways, Yeah, just kind of looking at that there, brother Will. I'm just kind of, so I'm gonna put these trades on later, and it'll more than likely be the Qs, the Qs trade, because of where volatility is sitting right now, and the Qs have been falling as the SPX has been going up a little bit in volatility, and I want to buy volatility and not sell it. At least for that, I would do stocks, but I mean, I'm just getting speculative. I may do both, because that means I'm doubling down on volatility, or I could do going up on Qs and going down. So it'd be almost like doing a double diagonal. You're using two things that are closely beta weighted, Qs and SPX. I mean Qs and spiders, and therefore you're doing a call diagonal on the upside on spiders, and a put diagonal on the downside in Qs. And it's not going to be a pairs trade to make it the notionals. It's just, because the notionals, I mean, I think I'll be paying less on the spiders, maybe 30, 40 cents on the spiders on the upside and 40 cents on the Qs to the downside. But therefore, you're getting kind of a double diagonal using the same delta concept. You're going 35 to 37 deltas outside on each one. So 35 deltas up on the spiders, 30 down, 35 deltas, 37 deltas down on the Qs. And therefore, you've got a double diagonal using two different instruments. It's not a full like an arbitrage or nothing, but that's kind of something I might be looking at for later on. But on this quote unquote election, their elections, again, I've got to go through a few more of these candidates, and mostly judges, that I got to go through before I head down here in a minute. And because I got to go through, some of their social medias. I was able to go through a few social medias earlier, but I got a lot more social media pages to look for before I go down there. Because your real government is your courts, and that's where that and ballot measures are where your real government is at. And so it's really important to look at those. Voting for crotch grab is like, it's a personality even though it's very important. Presidents are important. Don't ask me. Look at their courts. Okay, look at their Senate. Between president and Senate, that's who gives you your courtrooms. So that's important. Whoever's your president and whoever's your Senate is who's going to fill your courtrooms. So, so you really, really want to know, because the courtrooms are where all the decisions are allowed. The decisions might be initiated at certain points, with the government, i.e. Ted Cruz, Marco Rubio, but the decisions are made in courtrooms. So it's very important to know what those courts are doing. Anyways, hopefully that helps you. And y'all take care. Hotep.